It is Tuesday, September 9th, 2025. Welcome back to the College Financial Health Show with Matt Hendricks and Gary Stocker, where each week we look in detail at the financial health and even viability of private colleges throughout the United States. And Dr. Matt Hendricks, this has been the time of year when colleges announce with great fanfare either modest or really highly spun news about their enrollment. Let's make sure we talk about enrollment, and at best, Dr. Hendricks, it's a secondary indicator. Who do you have for us today?
Yeah, today you'll see actually a good case today of that where enrollment numbers don't tell the whole story about the financials and the health of a school. In fact, can be quite misleading. There's an interesting case today I'll show you, but and the case I'll show you is with Immaculata University in Pennsylvania, and then the other school is American University. Kind of like last couple weeks, we've had one that's struggling financially, the other one is doing just fine, actually doing quite well. And I think you'll see where I'm coming from. Immaculata struggling a bit financially, and American is massive and doing well. And I'll go through all the key financials and some of the maybe some opportunities that they may not have considered that we can see in the data for policy changes and stuff like that. So like usual, I'm going to go to the advanced compass, and I'm going to put the two schools up again at the same time. It's just efficient to talk about them that way. I'll show you how to do that again just by refreshing here. And I'm going to do the Immaculata in the first setting. That's the blue line, always blue. And green will be American. This is American University in DC, really big school. All right, so first, as far as financial health goes, blue is not doing so hot financially on the net income margin. There's a bunch of financial metrics I'm going to show you, and it's really, I think almost every metric, American's doing quite well, Immaculata not so much. So why am I saying Immaculata is not great here? You have big losses here on net income for many years, 2 years in a row. It looks like really negative every year except for during COVID relief is what happened. And so that's far less than ideal, of course. So that's going to show up on their balance sheet by a reduction in net assets, and other issues, or unrestricted net assets are not going to grow very well. But I don't think they have cash flow issues, but this stuff accumulates over time. They're not going to be able to invest in buildings and stuff like that. And you're going to see that. On the other hand, American looks good, although we have two negative values here. They're just tiny. And they had many years of positive, including a almost 10% positive net income margin in 2022. So they are doing just fine.
And they were in the news in the last couple of months that they were cutting back some stuff at American University because of
Yeah,
the.
and that's what a great university would do, right? They see these, they don't want to have negative net income, right? Even with this positive value, you just don't want these negative returns. And if 2025 is also negative, which they probably know at that number at this point, yeah, they're going to make cuts and fix it, right? That's what should be done.
Yeah.
So that's great. That's what a good school does. That's run well. On the endowment side, you can start to see all these things are just going to point to one doing well and one not so well. So American endowments up 85%, which is near the 75th percentile for endowment growth since 2016. Immaculata's endowment has grown about normally, but the thing to focus in on here is what's happened since 2021. Basically, they've gone negative since 2021. So the endowment
Yeah.
is shrinking since 2021, which is not normal. A normal endowment is growing still since 2021. And so that's concerning. And why is that happening?
I know, I know.
Yeah, the main reason that happens is you just get some outsized
Oh,
endowment
goodness gracious.
draws. And I was a little bit curious if these numbers were right, because as you know, the AI is what I have pulling these numbers,
Right.
and then I have a lot of cross checks that happen after the AI pulls it. But these are correct. They took a 10% draw last year, a 33% draw the year before, 10% draw the year before, and so now it's clear, right? Even though the market's done really well, if you're drawing 10%, 30%, 10%, you're going to have negative
Yeah.
growth in your portfolio. So that's what's happening here.
And you
Way
can't do
too
that for
big of
forever.
draws. Yeah, and the really scary part is, despite these massive draws, they still had losses, right? So
Yeah. Good point.
Immaculata's net income is probably far worse than what I just showed you. When you adjust, which all the credit agencies will do, and your bank will probably do, they'll adjust your net income to have a normal draw, not a 10% draw. A normal draw would be 4.5%. All right, so they'll do what they call adjusted net income to calculate your risk, right?
So that'll be a much lower number than from Immaculata.
Yes. And I do that on the strategic compass as well. I just did that for a client because, yeah, they had losses, but there was actually much bigger losses than they were showing on their audit because they were drawing a lot on the endowment. So keep that in mind. If you're a board member, you should always make sure that you adjust for a normal draw and then use that as your net income, adjusted net income, I'd call it. All right, let's take a look at revenue growth over time. So again, key metric here, what's happening with revenues. Let's take a look at operating revenues for both schools and how they've changed. By the way, in raw values, you can see American University has 700 million in revenues. Unrestricted operating revenues is a massive school. But I'm going to focus on percent change. American doing great. Their revenues, even though they're massive, their revenues grown faster than much smaller schools even, which is incredible. On the other hand, again, Immaculata, negative 20% operating revenue growth since 2016. Not good, right? The 25th percentile is about broken even, right? They're down 20%. So one of the worst in the country in terms of revenue growth. And then expenses, operating expenses right here. Again, I'll look at percent change. So American, you can see why they're getting deficits, right, Gary?
Yeah.
Even though the revenue's grown a lot, their expenses have grown by 41%. And that wasn't how much their revenue had grown. So they're getting some deficits. It looks like spending's going a little fast, which is probably what you're seeing in the news. They're like, well, we got to pump the brakes a bit. Certainly not a school that has any financial problems. They're just spent more than their revenue grew.
And there are many colleges that are getting ahead of the game, just not a big number.
Yeah. And so a good thing about Immaculata, you should give them some props here, is that even though remember, we see some schools where their revenue plunges and they keep spending the same amount. That's not the case at Immaculata. They've been trying, it appears, although not quite meeting what they need to do. They're down 15% on expenses. Remember, revenues are down 20%.
Yeah.
So you got to keep that in line, and they're falling behind there. All right, so let's take a look at just overall value of the school. That's net assets. And these should be growing about on total and on unrestricted. American, again, looks great, up 52% on total net assets since 2016. And again, Immaculata, not great, only up 8%. And that, again, is in the bottom 25% of all schools in the country. Let's look at unrestricted. It's really important, actually. This is probably by far the most important number on the balance sheet, in my opinion, because this is the actual value of the school if you were to say like sell it, right? It's like the school's net worth. All right, and so let's take a look at that. And again, Immaculata is not increasing their net worth at all, and looks great at American, up 46%. Okay, operating expenses, net assets, unrestricted. Okay, so let's take a look at CapEx. And your bank will look at all this, right? Or your credit agency. The rating agency for Immaculata was Fitch. And I'll have some interesting, I mean, I just looked at their credit rating and it was a bit confusing because of what we just talked about at the open, but I'll get to that in a moment. Okay, so for Immaculata, again, remember CapEx to depreciation ratio should be above 1 every year, or at least on aggregate should be above 1. And that doesn't appear to be the case for Immaculata.
Yep.
Almost every year below 1. Only 1 year above 1, I think we have here. Actually, 2 years out of 10. 2 years out of 9 above 1. Certainly, if you were to aggregate all that, they'd be below 1. American, they made some massive investments, it looks like, in early years here, 2016 to 2020-ish, and have since cut back. That's normal, but I think if you aggregated that, again, it's going to be above 1.
Right.
And the reason that is you can take a look at the property, plant, and equipment values at both of these schools. Again, ideally, the value of the property, the physical plant, all the equipment should be increasing over time. And that's the case at American again, up 20% since 2016. Not the case at Immaculata. The place is deteriorating in terms of the value of the property and equipment on campus.
And there seems to be a post-pandemic downward trend, even for American on PP&E.
Yeah, yeah. They probably just built a bunch of buildings back here, like you saw in the CapEx, and then since then they haven't built
Okay.
new buildings. But it is concerning that this is decreasing. Yeah, I'm not going to lie about that. That looks concerning because it shouldn't decrease, especially with the AI boom that's happening. If you're going to keep up with that, you're going to need to buy a lot of servers and GPUs, and those things are not cheap. So your CapEx, if you're going to participate in that part of the economy, you're probably going to need to invest a lot in your computing technology.
And it's possible in the DC area they sold something also, and that could have contributed
Yeah.
to a decrease in
Yeah.
PP&E.
Yeah. We're just looking at the aggregate. So
Right.
yeah, this is a massive school too. I'd imagine they have assets all over the place. So there could be a lot going on there. Debt to revenue. I don't know if that's, I'll show you, just so you know that all of this stuff is on here. We have debt. We can look at debt to revenue ratios. Both schools have a really high debt load relative to their revenues. But again, one is far riskier than the other, and you're going to see that on the interest spend. Interest. So interest spend relative to operating revenues. Blue is Immaculata. So remember that they have really like same debt to income ratios, but Immaculata pays a lot more in interest because they're just a riskier borrower, right?
Probably a higher risk also.
Yeah. Yeah, that's what I mean. They're paying a higher interest rate. Which goes back to what I was going to say about Fitch. Let's take a look at, I'm going to transition now into looking at specifics on the revenue side, start with net tuition revenue. All right, actually, let's do this. Let's look at the way Fitch did it. Let's do students first. So I believe the analysts at Fitch looked at this. They looked at their enrollment to when they're rating Immaculata, and I just read the report from 2024, and I was kind of interested in the analysis that they gave. They focused on this series here, which actually looks pretty good, right?
Yeah.
Immaculata's revenue is, or not revenue, their enrollment is up about 2% since 2016. So they put that in the report saying, hey, this school looks like they have moderately weak demand or something like that, or moderate demand.
Yeah.
Which you can't really tell what the demand look. You need to know what price and quantity look like, right? To see a demand function, you need both, right? So here you're just seeing quantity. Let's take a look at price. All right. So net tuition revenue. Net tuition revenue per student. All right. And here's where you can get a good look at the demand function, a bit more information about the demand function for Immaculata. Although their quantity is constant, their price appears to have fallen off the map. Students paid $17,000 on average in net tuition and fee expenses per student in 2016. In 2017 and 2024, it's 13,000. That's a huge drop. I don't have the percent on here, but I did calculate it because I wanted to know what that was for you guys. It's a 23% drop in the average amount and the average net tuition paid by a student, right? And that's nominal. So in real terms, man, you're looking at like a half, I don't know, just there's like double-digit inflation over this period, right?
Yeah.
So what we definitely know is although their enrollment is flat, the students are paying far, far less than they used to pay 9 years ago. That means to me, unlike what Fitch put in the report, that the demand for the school is actually in free fall. Okay. It's not good. In fact, they're really close to the 25th percentile in terms of what a student's paying to go to the school on average. So, yeah, goes back to what we mentioned at the beginning. Enrollment numbers don't tell the whole story about the demand for a school or even the revenues, right? It's entirely possible that revenues will decline even though enrollments are up. and that's what's happening at this school.
And Matt,
And
you've heard me say before that there are colleges that are giving away the store
yeah.
to get students in the door, and that's exactly what's happening here. The tuition discounts at Immaculata have to be massive.
Yeah, and so I was curious looking at Fitch's report. They didn't say anything about their net tuition revenue being down 22% since 2016. That's an incredibly poor performance on net tuition revenue. Again, that's below the 25th percentile. So 75% of schools in the country are doing better on net tuition revenue growth. Um, so yeah, I was curious if you should check it out if you're interested in how these credit ratings are put together. If you're a credit agency, you should probably look into this, getting this data set from me so that you don't
And
miss
Matt, have you talked
things
about the
up.
red line yet today?
Yeah, Redline is the closed schools. I haven't talked about it today, but there's a set of schools up here that have already closed, and I was just tracking. So you can get a sense of what to avoid. Um, and this is one of them, right? If your net tuition revenue is
Pretty
down
close.
30% over a similar period, that's flashing red problems there. So Immaculata on net tuition revenue, a really interesting story. Enrollment's up. Net tuition revenue has cratered by 22%. All right. So don't get fooled by enrollment numbers. Doesn't tell
Amen.
everything.
Amen.
All right. On the other hand, a really positive story with American, right? They're up 12% on net tuition revenue. And my bet is they've done both increases in price. Yes. People pay a lot to go to American, right? 31,000. Now they pay 36,000. And just put that in contrast, you can get a degree at Immaculata for a third of the price on average. All right. Okay, so that's the extent of my notes for my preparation here. So let's go through the expense side and see what we have going on. So again, really clear ones doing really well, others not doing so well. Let's see if we can find some stuff on the expense side for them to focus in on. I'm not going to focus too much on American. Obviously, they have a little bit of a deficit right now, but they know what they're doing, and they appear to have a handle on it. So we'll start with the just number of employees, the W-2 employee count, and what that looks like relative to revenues. And no shock here. Again, big deficits at Immaculata. No shock that you're going to have higher than normal payroll, right? That's what we're seeing right here. A lot of
Yep.
employees. They're in the top. So they're in the top 25% of all schools in terms of number of W-2 employees they have relative to their revenue. And relative to
And that's not a good
FTE,
indicator.
no, yeah, you don't. That's clearly why they're not able to balance the budget, right? Uh, One of the problems. So yeah, you've got 4-year revenue. They should be paying. They should have a much smaller number of staff. Let's take a look at the top end here. Okay, so again, American can afford to do whatever they want on the
Right.
staffing for the most part. I'm going to focus on the blue line. They're low actually on number of staff paid over 100K. So probably what's happening here is what this means with the previous graph was they have a lot of staff, and it's typically lower paid staff that they have a lot of. All right. So you're not looking at necessarily the top end employees. You're looking at sort of the mid range. That could have a lot of extra folks working there. I'm going to do the same thing here. Let's take wow. Okay, so this is from their 990, and
It's got to be bad data
whoever filled
entry.
out their 990
Yeah.
appears to have messed it
They
up.
skip that field.
Yeah. Yeah, that's not good. Again, this goes to the IRS, so make sure that this is accurate. All right, I'm gonna skip that one because it's kind of messed. Non-employee. Okay, that looks fine. Okay, this is your retirement contributions. That looks okay. Um, non-officer, other benefits looks okay. Okay, so what's emerging here is, yeah, payroll taxes are high. So I think what's happening is they just have a lot of staff, and it's not the staff that has really high benefits and high pay. It's the mid-level or low-level staff to look at. And of course, we can drill way down in a strategic compass, but this is all I can see from the 990s on the staffing side. I'm going to go into some of these other big expenses like advertising. You know, yeah, here's one. Immaculata. Wow. That's a really
Goodness.
high advertising spend. And again,
And it's not
doesn't appear to
working.
be working at
It's not
all.
working.
Right. Yeah, if it were working, you would be getting more money per student
Yep.
and keeping your enrollment constant, right? Remember, they're paying less. IT spend. Wow. Okay. IT spend is out of control. All right, go there immediately. That's a lot of money to be spending on IT. That's $3.6 million
We're going to see
per
that in the vendor table
student.
here in a minute, aren't we?
I bet we'll see a really big IT vendor here in a minute. Again, I didn't prep this. I don't know. So they're spending $1,600 per student on IT. That just to give you a sense. Remember, the students aren't paying very much to go here. So a lot of their money they're paying to the school is not going to the faculty. It's going to IT. All right. And marketing. Not a great way to run this place. Normal would be $700. Okay. Not 16. What are we at? $1,600. So IT, let's take a look at the vendors in a minute. Insurance. Okay, looks normal. Occupancy costs. Okay, yeah, whoever's filling out the 990,
Yeah.
that can't be right. All right. Office expenses. They probably put it in here instead of occupancy,
Oh,
which
yeah.
is
Yeah.
incorrect.
That's
But
a good point.
double check this. Again, this number is really high. Could be just incorrect reporting. Fundraising expense. That looks okay. Travel, conferences, fees for services. Let's take a look at this. Okay, they're high on vendor spend here as well, which wouldn't include the IT. That's in the other IT part. Food service
Here's your
contract.
favorite one.
Yeah, that's not my favorite. It's just one that's like irritating because it's a huge contract and there shouldn't be so much variation in it, to be honest. And there is. Yeah, this looks high. All right, we'll take a look. Looks like they just added a food service vendor recently, and it's incredibly high. All right, near the 25th percentile, or 70, top 25, 75th percentile. All right, so we kind of have a sense of what we're going to see here in the
Yeah.
contracts, but I didn't actually do that. Let's do the number of contracts first. Contractors paid over 100K. We do this a lot, right, Gary? So I'm going really fast, but if you're at one of these schools, feel free to reach out. This is really a standard thing we see at schools that are struggling financially. And here's another one. A ton of contracts over 100K. They have 26, which is very high for how big the school is. Again, Americans just can do whatever they want, but Immaculata can't. All right, they're in the top 25% on both staffing and contractors, IT, advertising. These are big expense items that can't be too high. And they are. All right, they appear to be too high at least. All right, let's take a look at what we can see with some of these contracts.
So, Matt, while you set up the vendor table, I just want to point something out. And you've teased a couple of times today that your preparation has been modest. Well, all right, we'll take your
Yeah.
word for it. But what I want to point out to those watching this show is how quickly Matt can access the data and how quickly he can make the comparisons on the fly. Now, Matt, you don't know this, but I do this almost every day. I will get folks looking at a college and I jump on the prospective data science, your advanced compass, and within minutes, I give a 10, 15 point assessment of a college using this
Mhm.
data. So those of you looking at this video from whatever college you're at, the data that you're looking at here is yours to be able to compare your organization to some 1,200 other private colleges, the same way you see Matt doing it for just the two colleges we're looking at today. And he has
Yeah.
referenced the Strategic Compass, which is another product. And if you're looking for data, reasonably economically inexpensive data, that Strategic Compass will drill down for you and compare your data across, I think, 15 or 16 different report areas. Use the data, don't use the data, but it's out there. And this is an example of what the proper use of technology and data can mean for
Mhm.
organizations. Matt and I know more about colleges than almost anybody else in terms of their finances. You know why? Because we use his data, we use his apps, and we use my stuff as well.
Yeah. Yeah, so just like we suspected, Gary, who do we find for two big contracts here? Both of these contracts individually are high. They have two IT contracts over $1 million. Yeah, somebody needs to get to the bottom of what's happening there. At least ask the question. What may be
Color is
happening?
bad on those two white columns. Color is bad, right?
Yeah, color is bad. They're in the top, like over about a standard deviation high on each. Combined, they're probably well over two standard deviations above normal. Okay, so what happens here? Oh, maybe they bought out of the Aleutian contract and then went into this new contract. Sure, but that's still high. I mean, if you're just going to go with this, if you're going to roll with this one going forward, 1.3 million is still way too high.
It was in the same year,
Yeah.
2024.
See, so yeah, that's not good. All right. So on the food service contracts, remember they have a normal number of students, but they don't pay very much, right? So their food service contracts actually decent for how many students they have, but it's terrible for their revenue. Because remember this, so remember I just said would they pay like $1,600 per student for IT,
Yeah.
and now we got 1,300 per student for dining, right? How much were the students paying again? I mean, it
13,000
wasn't
total.
that much.
So
So
that's
it
about
just
not
doesn't
quite a
leave them
quarter of,
much.
yeah.
Yeah. I mean, really the auxiliary revenues were they going to be paying for the dining, but you see the point, right? They just don't have a lot of money to be spending per student, and yet they're high on some of these items. Yeah, this was still high per student. Last year's food
2
service
million.
contract looks like they were able to get it down a bit, which is good, but it's still a bit high for where they need to be. But again, it's mostly because the school is normal size, but they don't pay that much. So that's a little bit trickier solution.
Yeah.
It's more about asking the students to pay more. Um, and if you're not going to do that, you got to cut down everything, even below where we're benchmarking. All right. So another one to look at. This is kind of curious. This must be some kind of related group. Sisters of IHM, student teaching. Yeah, I don't know enough about this, but I would say all this is worth looking into. There's an $800,000 contract with EAB for marketing. Remember, we said marketing was high,
It's high, yeah.
and it appears to be not working. All right. Has anybody checked this recently? Looks like it was the first year with them. Did they meet their targets? Is somebody following up? A really common thing to happen with these contracts is they set them up and then nobody bothers to check if it's worth the school's money for like years.
Yeah.
So a bad contract can keep going on for years and nobody bothers to really check or hold the vendor accountable. Don't do that. Make sure you're checking this. And that's a lot to spend on EAB for anything. All right. So yeah, check that. It's high for their revenue. Okay. I think that's it for this, Gary. We can look at I'll just throw American in here just in case. But again, I'm not worried about American. They can cut a little bit out of their
Oh,
budget
yeah,
and
they're doing
it's
fine.
fine. This one is something to look at though. This contract notoriously didn't work out for schools, and they may be winding it down at the moment from 18 to 15 to 9. Yeah, they're probably winding it down. This was a online
Right,
um
right.
yeah, I think yeah. So it's high, and hopefully this is falling off
And
now.
interestingly, it's high in 2024 when 2 years.
Oh, it's because it switched, right? Because they called it an educational consultant before they called it online education,
Oh,
which I
okay,
wasn't
got it. Yep.
harmonizing before.
Interesting.
But
Interesting.
yeah, it'd be worth looking into this, double check. I did work with a really big school that had this contract and it didn't work out for them. So I just know this from experience. So double check that. The rest looks fine. Compass. Okay. Yeah. I mean, this is such a big school, they can easily cut a little bit of money out of their budget anywhere without really affecting operations at all. All right. I'm gonna pass it back to you, Gary.
So we've had this conversation before, and not just Immaculata today, but we run into those colleges, Matt, where they're maybe trying to cut, trying to get expenses in balance with revenue, and they just aren't successful in doing it. And this culture of cutting has to at some point reach a level when faculty, staff, and even students say, I'm not taking any more of this. What are your thoughts on that?
Yeah, I mean, my general thought is the if you're gonna cut stuff, you just have to be sure about it. and you got to be transparent about it. And I think if you have something like this to show your faculty, show your board, show alumni, show students. Again, I've said it many times, reasonable people are going to say, yeah, okay, our marketing spend looks really odd, right? So yeah, it makes sense. It's a reasonable policy change to cut that down. Or we're going to cut back on IT spend. Yeah, you might not have 3G up and down. You might wait a little longer for a ticket to be filled, but we're going to balance the budget. And so these are the kinds of things that we're going to do. All right. And just being transparent about it that way, I think is the way to get it done. And where it usually fails when schools really just have a terrible time of cutting costs is
Yeah.
when the administration's not confident in what they're doing, they can't sell it to the stakeholders. It's just a disaster, right? Even if they're doing the right thing, if they're not confident and they're not selling it, not going to work.
And then you and I almost for every show, we bring up the CapEx to depreciation ratio. And of course, as you mentioned earlier, that shows how much a college is investing in its infrastructure. And I've made the case before that there's a connection, a potential connection, Matt, with a low CapEx depreciation ratio and safety in a college. If you're not investing as a college in keeping the roofs up to date and cleaning up mold and all those kind of things associated with infrastructure, don't you run a more significant risk of a significant safety issue developing at those colleges?
Yeah, potentially, I'd imagine. Yeah.
Okay.
Yeah.
And let me just Matt showed you his tools. We talked about the advanced compass. We talked about the strategic compass. Let's take a look at a couple other tools that are available for these two colleges. So let's take a look at the 2025 College Viability app, the executive analysis version. And I always start with graduation rates. And Matt, we have two colleges that are at least graduating students. And as you talked about during your part of the show, Immaculata is struggling financially, but God bless them, Matt, they're still graduating students. Because we
Oh,
see too many times colleges in dire financial straits who can't graduate even half of their students in 4 years. So again, kudos is appropriate to Immaculata for graduating students. American University doing an even better job. They've got the financial resources to do that. I was looking at that graduate enrollment for these two colleges. And because as we'll see here in a minute on the college majors completion, look at the numbers for American. Their graduate enrollment is significant. Now, it's down a little bit over the last few years, and not as much so for Immaculata, but I thought that was intriguing that American had more than 5,000 students and over 6,000 some of these years in the graduate programs. And then we talked about giving away the store, all right? And there are such things as funded institutional grants. The Matt Hendricks Economics Scholarship, all right? And Matt's going to give $10 million to the University of Tulsa to fund a student scholarship. That's funded. We can see in total that American only has best spent theirs down, not much, and Immaculata really not much more than college couch change in terms of funded scholarships, right? The reason I show that is I want to bring up unfunded. This is called unfunded institutional grants. And this is essentially, for those watching the podcast, watching the show for the first time, this is merit aid, and this is most scholarships, not all scholarships. And we can see that American has gone from 109 million in 2016 up $78 million. Now, again, they can afford to do that, but they're discounting their tuition heavily to get students to enroll, and that's fine. They're welcome to do that. Immaculata, and this may be a reflection of their market position, they're down over $2 million. They're spent 13 million, almost 14 million in 2016 and down to 11 million and change in 2023. They've lowered the amount of discounts they have provided, and yet we still saw modest enrollment increases, if anything, more flat than anything. But their tuition fee revenue still was not good at all. And then, you know me, I like to do quality control on Matt's data. So this is the one time that I do this. And again, tuition and fee revenue, he knows I'm teasing. American University, their tuition and fee revenue is up $62 million over the last 8 reported years. This is from the IPEDS data. The college itself reported it, and Immaculata is down $6.5 million. And again, Matt, you know, all businesses have down years, but you can't be losing $1 million, not quite $1 million a year in a business, year after
yeah.
year after year, and not expect negative consequences. And then we take a look at majors, and I've got this set up for the internal market share. This is the internal market share for both Immaculata and American University. And I've got just bachelor's degrees brought up. There are 32 majors included for these two colleges and almost 5,000 completions from 2020 through 2023. And we look at the high end as first, and we can see some of the programs that are relatively strong at Immaculata, not particularly so. And we can see quite a few programs that are really strong at American. Again, neither of us is going to be surprised at that. They have strong finances, they have strong programs. And as always, we look at the low enrollment numbers. And I had a story yesterday on the podcast, Matt, about Ohio and Utah being the most recent states to specify a minimum number of graduates in a given major, or those public universities have to cut those majors. Doesn't apply to private colleges, but that trend is really kicking in as we start the 2025-2026 school year. And again, I'll ask the rhetorical question, what is Immaculata doing in social work, in chemistry, in music, in finance, in marketing? They have next to no graduations. And if there's a number out there, it's averaging 5 per year. That's on the low side. Some are 15 per year. And so even at 5 per year, you can see that the college, the bachelor's offered at Immaculata, there are many they should consider stepping away from. And I understand, Matt, they each provide some tuition fee revenue. And we do the same thing for American. Again, that's a fair number of low enrolled majors. And we've talked about this before at colleges. This is probably the year when colleges realize they cannot be everything to everybody. And we've seen it all summer long with cutbacks and layoffs. And Matt, we're going to continue to see that as the academic year progresses, especially probably this coming spring. And then finally, the new mycollegeviability.com website and our good friend Viability Val and I brought up these two colleges, and we used some technology to assess the overall value of American University, good overall, Immaculata University, favorable payoff on the degree, and then we look at a lot of individual factors. I bring this up, Matt, just because it's a tool that's available. The free version is available, and the paid version will be out soon, where students and families can compare the finances, the completion rates, all sorts of items for students in private colleges today and public colleges in the future. So, Matt Hendricks, it's always the comparisons, and we saw two distinct examples today. And as we release this video later today, I will tag the leaders at American University. I will tag the leaders at Immaculata College. And we get feedback. Sometimes we get follow-ups from those kind of items, but it's a new era. I know that's trite. It's a new era in higher education, and the data that Matt Hendricks provides, the data available through his advanced compass and through his strategic compass, the IPEDS comparisons I provide for almost 3,000 public and private 2- and 4-year colleges are tools that we encourage you to take a look at. If you want demos, private demos for any of them, I'll have my contact information in the show notes. Feel free to drop me a note, and we'll schedule a Zoom demo to go over those applications that interest you. So, Matt, how do you want to wrap this one up?
We're offering insights into data that even Fitch doesn't have, right? I mean, literally, they have to hand collect this stuff, and they won't have the level of detail that we have. So yeah, take advantage of this. It's sort of a revolution happening in the sort of transparency in higher ed, and we're going to keep pushing.
Amen. So for Dr. Matt Hendricks, I'm Gary Stalker. Thanks as always for making time to watch the show. We'll be back next Tuesday with 2 more colleges on the College Financial Health Show. We'll talk then.